and greetings to all in this month of Raksha Bandhan, Independence Day, Janmashtami, Parsi New Year, and Ganesh Chaturthi. May this pious and auspicious month bring good luck to all of us and to our economy. The monsoon season has been progressing well. We are also approaching the festival season, which typically brings greater enthusiasm and buoyancy in the economic activity. This favorable setting, together with supportive policies of the government and the Reserve Bank, augurs well for the Indian economy in the near term, as geopolitical uncertainties have somewhat abated, even though global trade challenges continue to linger. Over the medium term also, the Indian economy holds bright prospects in the changing world order, drawing on its inherent strength, robust fundamentals, and comfortable buffers. Opportunities are there for the taking, and we are all making efforts to create enabling conditions through a multi-pronged yet cohesive approach to policy making. Globally, policymakers are faced with muted growth and slowing pace of inflation, with some advanced economies even witnessing an uptick in inflation. As the dust settles and a new equilibrium emerges in the new global order, policymakers will have a tough task navigating a world characterized by modest growth, sticky inflation, and elevated public debt levels. At the Reserve Bank, leveraging on the room provided by a significant moderation in inflation, we have taken decisive and forward-looking measures to support growth. The coordinated use of various tools available to us has helped accelerate monetary policy transmission in the current easing cycle. The Monetary Policy Committee, MPC, met on the 4th, 5th, and 6th of August to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the MPC voted unanimously to keep the policy repo rate under the Liquidity Adjustment Facility, LAF, unchanged at 5.5%. Consequently, the standing deposit facility rate shall remain unchanged at 5.25%, and the marginal standing facility rate and the bank rate at 5.75%. The MPC also decided to continue with the neutral stance. The MPC noted that while headline inflation is much lower than projected earlier, it is mainly due to volatile food prices, especially in vegetables. Core inflation, on the other hand, has remained steady around the 4% mark as anticipated. Inflation is projected to go up from the last quarter of this financial year. Growth is robust and as per earlier projections, though of course below our aspirations. The uncertainties of tariffs are still evolving. Monetary policy transmission is continuing. The impact of the 100 basis points rate cut since February 2025 on the broader economy is still unfolding. On balance, therefore, the current macroeconomic conditions, outlook, and the uncertainties call for continuation of the policy repo rate of 5.5% and wait for further transmission of the front-loaded rate cut to the credit markets and to the broader economy. Accordingly, the MPC unanimously voted to keep the repo rate unchanged. The MPC further resolved to maintain a close vigil on the incoming data and the evolving domestic growth inflation dynamics to chart out the appropriate monetary policy path. Accordingly, all members decided to continue with a neutral stance.